Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, get everything you need to know in 90 seconds at 9 o'clock. With news, we have finally transitioned through the GFC and into a different world. Financial markets are fretting over the ability of the bond markets to absorb an approaching interest rate rise. But the US Fed has a message for the industry: deal with it. Rising rates have been signalled for some time by the regulator, and market angst will be brushed aside by these policymakers. A bump in the road is coming, a big bump for bond investors and others who bet that markets would stay weak for a long time. But both the US and more lately the EU have turned the growth corner. Expansion looks far more likely these days. Japan and even China, despite recent events, look less risky. It is only the emerging markets who still have questions hanging over their immediate future. What is odd about this is that the major international economic institutions, the IMF, the World Bank, even the OECD, seem to be on the back foot, seeing the future through a strong reverse lens. Even locally, it looks like Australia will get through the realignment of its economy away from a dominant mineral sector, and that dairy-induced gloom in New Zealand looks overdone. These transitions will be there, but they're not the only things happening. As a local example, few of us realise that dairy is about to be relegated to second place in our export sector as booming tourism takes over. And with expanding job creation in the US, the engine is in place to drive China, Japan and the EU. And those second-level economies are vital for Australia and New Zealand. The other large issue we overlook is that services dominate our economic performance. It is much easier to focus on the traditional goods trades, but in most economies now, these represent less than a third of economic activity. This is especially relevant in China. We've always looked at that market as a factory for cheap goods, but we are wrong in that view. Services and high-end products are now allowing incomes to rise there in a sustained way. Tourism overtaking dairy is an example of a trend replicated worldwide, dominant in the US, emerging in China, even happening in New Zealand. In New York, the US Treasury 10-year yield benchmark is basically unchanged today, now at 2.36%. All markets are also unchanged. The US benchmark price is now at just over $50 a barrel, and Brent crude is just below $57 a barrel. The gold price, however, is down yet again, now at only $1,102 an ounce. In fact, got as low as $1,094 last night at one point. The Kiwi dollar showed more gains overnight. We start today at 66.4 US cents, 89.4 Aussie cents, and at 60.7 euro cents. The TWI is at 71.1. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.